Hello my fellow investors and welcome back to another earnings report analysis. Today guys, two major companies that I really would like to see the earnings report had earnings, and I would actually like to analyze both. Now you guys are seeing the first one right here, Broadcom. Can't wait to actually analyze the earnings report for this company because as many as you all know, if you guys have been on my channel before, Broadcom is one of my babies. I absolutely adore this company, and man, it's just one of those companies that you would kill to buy at a great valuation because what they bring to you is absolutely insane, especially when it comes to that dividend. And the second company we're going to cover right after this one, so stay tuned for that. So with that said guys, let's get started with this first earnings report analysis for the company Broadcom. So coming over here to Seeking Alpha, we can see their summarized earnings. Now they said not been updated, however, they did have earnings as of today. The EPS normalized estimate guys was $10.28, EPS GAAP estimate was $7.49, revenue estimate $8.9 billion, and as you can clearly see, a lot of people thought that this was actually going to be worse than better. Now actually coming over here to their earnings, before I get started with this, let me just remind everybody that of course this is not financial advice, and I'm going to actually leave this earnings report page in the description below just so that way if you guys would like to read it for yourselves. Now let's actually analyze this earnings report guys when it comes to Broadcom. First bullet point, take a look at this. Cash from operations, $4.583 billion for the fourth quarter, less capital expenditures $122 million, resulted in $4.461 billion of free cash flow, or 50% of revenue. The first line, they're already telling us the free cash flow, and I love that so much. And on top of that, take a look at this. It was essentially 50% of the revenue, which is massive. Quarterly common stock dividend increased by 12% to $4.60 from the prior quarter. And this is one of the reasons why I absolutely adore this company, because their dividend is massive. They have one of the biggest dividends I have seen in the whole entire stock market. I believe the only one that beats it is actually BlackRock at like $20 per annual dividends per share, which is insane. Revenue of $8.93 billion for the fourth quarter, up 21% from the prior year. Absolutely massive. Can't wait to put this into my calculator and see what valuation we actually get from this. GAAP net income of $3.359 billion for the fourth quarter, adjusted EBITDA $5.7 billion for the fourth quarter, GAAP diluted EPS $7.83 for the fourth quarter, non-GAAP EPS of $10.45 for the fourth quarter. So even though when it comes to Seeking Alpha this has not been updated, we can see that they essentially beat guys in every single part of these quarters earnings when it comes to Seeking Alpha. Now, first quarter revenue guidance approximately $8.9 billion, an increase of 16% from the prior year, and first quarter adjusted EBITDA guidance approximately 63% up projected revenue. Guys, these numbers are absolutely insane. This is just looking so good, it's not even funny. So let's actually see what the CEO had to say about this. Broadcom's fiscal year 2022 revenue grew 21% year over year to a record $33.2 billion as a result of a strong demand from hyperscale service providers and enterprise, said Hock Tan, president and CEO of Broadcom. This growth was driven by our strong partnerships with customers and accelerated adoption of our next generation technologies as we look into fiscal year 2023. Our increased R&D investment during the preceding years positioned us to extend our leadership in next generation products within the end markets we address. In fiscal year 2022, we achieved record adjusted EBITDA margin of 63%, generating $16.3 billion in free cash flow, or 49% of revenue. I like how they just rounded that up to 50 up there, demonstrating our stable and focused business model, said the CFO of Broadcom. Consistent with our commitment to return cash to shareholders, we will resume our authorized share repurchase program. What, for the remaining $13 billion, we are increasing our quarterly common stock dividend by 12% to $4.60 per share for fiscal year 2023. The target fiscal year 2023 annual common stock dividend of $18. Oh my God! Of $18.40 per share? What? Oh my Lord! And the 12th consecutive increase in annual dividends initiated. Oh my God! This is insane. Their target, guys, is $18.40 in annual dividends per share. Oh dear Lord. And on top of that, they're going to continue doing the share buyback. Oh, this is just insane, guys. Oh my god, I really can't wait to go into the fundamentals for this company because this is looking amazing. Let's actually compare some of these numbers with the same quarter last year. We got the revenue gap, we got 7.4 billion Q4 2021 to 8.93 billion in 2022. That was up, guys, 21%. Net income 2 billion to 3.36 billion. That was up 1.37 billion dollars. And the earnings per common share diluted $4.45 to $7.83. That is a difference of $3.38. Looking at the free cash flow now, take a look at this. Q4 2021, $3.45 billion to $4.46 billion. That's an increase of $1 billion. I cannot believe it, guys. This is just absolutely insane. So with all of that, how did the stock price actually move? Well, we got right here, guys. Broadcom during the day went up 2.43%, $12.58. Now, the entire market was up today, a pretty big amount. However, after earnings came out, guys, Broadcom rose another 3.2%. Almost $17 to $548.05. On the 1 year, guys, this company's still down almost 10%. On the year to date, they're down 20%. 52-week ranges is massive. $415.07 at the lowest, which unfortunately I really wish I would have bought at this point. I couldn't, but oh my god, it's so tempting right now. And the highest peak, guys, $677.76. And by the looks of it, I don't think this is going to stop rising, especially after those kinds of earnings. So now let's actually take a look at the calculator. We got the ticker symbol of AVGO, market cap of $225.4 billion, a P of 23.13. Now the share price, for some reason, Google Finance is having an issue with this, but we just saw it, guys, at $548 after market. Annual dividends of $16.40, which is insane. Dividend yield, guys, is 3.16%. Payout ratio is 46.86%. And by the way, the payout ratios in regards to the free cash flow aren't that bad either. Take a look at this 5-year CAGR, guys. 32.08%. Let me just say that one more time for the people in the back. 32.08%. In the past 5 years, they have increased this dividend 32.1%. And it's not a tiny increase either, guys. This is a massive dividend. $16 per share. It's absolutely massive. Like, it's ridiculous. Most companies do not have it this big. It's insane. It's just mind-boggling to think that they're planning on increasing it even further, all the way up to $18.40 by 2023. That is just mind-boggling. Oh my lord. If this is a time to get into this company right now, oh my, this is just, I am salivating at this point. Look at this. Dividend growth, 10 consecutive years is not even tiny either. 10 consecutive years of consistent dividend payment is amazing. Ex-dividend date passed as of September 21st, payout date was on the 30th, and they pay their dividends quarterly. Now, based off of the shares outstanding, this ends up being $6.6 billion being paid out in dividends every single year, which after this is paid out, guys, in their 5-year average free cash flow, they're still left with almost $3 billion. And as of their last year's free cash flow, it is $6.7 billion. These payout ratios come out to be 49.86 for the last year's free cash flow, and for the 5-year average, 69.32. The 5-year average is a little bit high for me, but honestly, it's not too bad seeing that they are consistently increasing their free cash flow. So now let's actually take a look at quickly their fundamentals. We got the net income, guys, 5 years ago of 1.7 billion to 1 year ago of 6.7 billion. Guys, that's an increase of almost 300%. They did have an outlier 4 years ago, and they had a pretty big jump from 2 years ago to 1 year ago. So for that reason, I'm going to give it a 50%. Free cash flow, it is just absolutely crazy. 5 years ago of $5.48 billion to 1 year ago of $13.3 billion, increase of 143% with an average of $9.58 billion. Guys, I'm going to give this a perfect 100%. There has been a single time where they decreased it a little bit. Every single year has been consistently growing. When it comes to the revenue, same exact thing, consistently growing. 5 years ago of $17.6 billion to 1 year ago of $27.45 billion, increase of 55.65%. I'm gonna give this another 100%. Coming down to the assets minus the total liabilities, this is actually kind of looking subpar. They have been stagnant within the past 5 years. As of today, they're under their 1 year ago mark. And as we just saw, we just got their fourth quarter for their fiscal year 2022. So I think this is where we're pretty much ending right now. So that's not good that it is significantly lower than that of the past several years. Now, average total assets is 68.1 billion. Average liabilities is 43.8 billion. Doing this difference, we get around 24.3 billion dollars. I'm gonna give this guys a 45%. Cash flow minus liabilities, their lowest year was 3 years ago at negative 42.76 billion dollars. However, from 3 to 2 to 1, they have been increasing it. Average cash flow minus average liabilities, we got around negative 34.22 billion dollars. I'm gonna give this guys like a 40%. Shares outstanding, this one is a little bit tricky because they have had years where they increased it. Like for example, 3 years ago to 2 years ago, and then from 2 years ago to 1 year ago. However, on the 5-year scale, they have been buying back, going from 409 million shares to 405 million shares, a decrease of almost 1%. And from the previous year to the current year, that's almost a buyback of 2%. And again, they said that they are going to continue buying back, so that's really, really good. I'm gonna give this guys a 70%. And last, when it comes to the cash and equivalents, they currently hold almost $10 billion with an average of $8.4 billion. All the way the grades, guys, come out to be a total grade of 74%, which means that it is a pass, at least on my end. Okay guys, now let's actually see whether or not at the current share price of around $548, it is a buy. Making a low, median, and high assumption, revenue growths of 10, 13, and 16% in the next 4 years, and a predicted share buyback of 0.51 and 1.5%, and keeping a required rate of return flat at 10%, guys. For the target share price, not adjusting for debt, we get $575.18 all the way up to $706.31. When it comes to adjusting for debt, this comes down to $526.69 all the way up to $657.32. Margin of safety of 5, 10, and 15%. This puts me between $447.69 all the way up to $624.46. And as you can clearly see, only for like a few instances for like the target share prices after debt, as you can see right here, low assumption 5, 10, and 15%, as well as the median assumption for the 10 and 15% margin of safety. This is still looking like it's a very good buy overall. I mean, in some cases, it's right there in regards to the margin of safety, and some instances is way too far like it was right here. However, guys, remember that AVGO went as low as $415. So we did have a chance to buy at really, really super cheap valuations according to my discounted free cash flow. So according to this is looking like a buy. But of course, guys, please do your own due diligence. This is not financial advice. Every investment is the present value of all future cash flow. So please have this calculator, make your own assumptions, because if you believe that this company might actually do 21% in the next 4 years, I personally don't think so, but if you believe that they'll continue 21%, well, if we put 21%, guys, and a 1.5% share buyback, it is now $825.91 for the highest assumption. So it really just depends up to what you put in for the calculator. So please have it. It's free. I also have my book value calculator, the reevaluation calculator, and a dividend tracking sheet. And in fact, full disclosure, I own this company, guys. You can see right here, I don't own that many shares. I only own 9 shares, but I still own it, and I absolutely adore it. And unfortunately, I was not able to buy when this company fell to $415. So the fact of the matter that this is telling me that this is still fairly cheap at this point, I might even pounce as soon as I possibly can, because if this thing should be worth $638, I really would like to get in right now. All I'm asking for in return, guys, for free calculators and daily content is just help me grow my channel. Like, subscribe, comment. It really does help. Thank you all so much for everybody who have subscribed. I cannot believe that this many people just enjoy my content. I really do appreciate it. I love the interaction in the comment section. I really, really do. You know, I have no sponsorships. I don't believe I'll ever take one. So please, the best way that you guys can help me grow my channel and just help me out is just like, subscribe, comment. It really does help. So thank you all so much. I really do appreciate it. Now, when it comes to this dividend, guys, let's take a look at this. Putting in $5,725 with an annual dividends of $16.40, this nets you 10.45 shares for an annual dividends of $171.34, quarterly of $42.83, and a monthly of $14.28. Let's actually put this value, guys, at 415, which was the lowest of this year. Guys, take a look at this. Putting in the same amount, this would have netted you now $226.25 in annual dividends if you would have bought at that lowest point. Now, obviously, that's different today, but it's still looking like it's a really good price to buy it at nonetheless, right? Especially if you believe that this company should be worth $600 plus, as my calculator says. All in all, I absolutely love Broadcom. It is one of my favorite companies. I wish I was able to have bought this company earlier. However, it is what it is. I guess now is no time to sulk about it and just take advantage of the price valuations today. Now, with that, let's head over to the second company, because this one also had earnings today, and it's a company that a lot of people would love to fall, and it's very, very difficult to see any movement when it comes to this company at all. So with that said, let's move over now to, and that is the company Costco. Guys, this company has just been on a tear lately, and a lot of people would actually like it to come down, myself included, because, well, guys, their fundamentals are insane. So let's actually take a look at their earnings and see that when it comes to their EPS normalized estimate was $3.16, EPS GAAP estimate $3.12, revenue estimate of $54.68 billion. Now, coming over here to their actual earnings report, remember that I will also have this one as well, link in the description below if you guys would like to see it. But when it comes to companies like, for example, retail companies, you have to make sure that you take a look at comparable store sales. That is very, very important. They actually have it right at the beginning of their earnings report. Now, the earnings report starts with net sales for the first quarter increased 8.1% to $53.44 billion from $49.42 billion. So right then and there, we actually see that they did not actually beat their earnings estimate, at least when it comes to their revenue, according to analysts. They were short by a little bit. Now, comparable store sales is as follows. In the United States, in the past 12 weeks, 9.3%, Canada 2.4%, other international negative 3.1%, and the total company of 6.6%, and e-commerce of negative 3.7%. And now actually coming over here to the numbers, we got the revenue net sales, guys. In 2021, November 21st, it was $49.4 billion, and November 20, 2022, $53.43 billion. And their total revenue was actually $4 billion higher than that of last year. So that was actually not too bad. And when we come over here to the net income per common share attributable to Costco, i.e. the EPS, we can see that the basic was in at $3.07 and the diluted was the same at $3.07, which again, compared to what analysts were thinking, it actually came in significantly lower. And lastly, I would actually like to take a look at their assets and total liabilities. We actually got their total assets, guys, right here, $66 billion in total assets, which was an increase by around $2 billion from the same time period last year. And when it comes to their liabilities, their total liabilities went up to $44.55 billion, and in last year it was $43.5 billion. So as you can clearly see, they have increased their assets a lot more than that of their liabilities, which is really, really good to see. So how did this earnings report actually do when it comes to the share price? Well, right here, guys, I have the article, Costco stock slips as earnings fall short of expectations, which I just showed you guys they did. They pretty much just missed on everything. So they actually fell a really small amount on the day. So on the trading day, they fell around 0.11%, 55 cents. And on the post market, after earnings came out, they fell another 0.3%, $1.42 to now a share price of $480 on the spot. On the 1 year, guys, they're down 9.18%. On the year to date, they're down 15.05%. 52-week ranges is $406.51 to $612.27. So pretty similar to Broadcom, honestly. Not in the 52-week low, but a little bit lower than actually Broadcom itself when it comes to this range. All right, now coming over here to the calculator, we got the ticker symbol for COST, C-O-S-T, market cap of $213.1 billion, a PE of 36.64 with a current share price of $480, as we just saw. Annual dividends, guys, is $3.60, which is a yield of only 0.75%. Payout ratio is 25.47 and a 5-year CAGR of 12.35 with 18 consecutive years of dividend payment. So not as high as Broadcom, but guys, 12.35 is still very, very respectable. And also, when it comes to this yield, understand that Costco has a tendency to actually put out special dividends. In fact, they actually put out a special dividend on November 30th, 2020. of $10 per share, which is absolutely crazy. Now, their ex-dividend date passed as of October 27th. Payout date was on November 10th, and they pay their dividends quarterly. Coming back now into the calculator, this $3.60 ends up being, based off of their total shares outstanding, almost $1.6 billion in dividends being paid out every single year. And based off of their 5-year average free cash flow, they're still left with $2.6 billion. And based off of their last year's free cash flow, they're left with almost $2 billion. The fact that their last year's free cash flow is lower than their 5-year average tells me that essentially last year's free cash flow was less than the average, so this is actually a decreasing free cash flow. These payout ratios come out to be 45.52% for the last year's free cash flow and 37.79%, meaning that at least for my standard, cut off at 60%, this is still looking very, very good. Looking now at some fundamentals, starting of course with the net income, 5 years ago at $3.13 billion to $5.8 billion, increase of 86%. And this graph is looking very, very smooth, guys. I'm going to give this a 100%. Looking now at the free cash flow, we did see that it was looking a little bit funky, especially when it comes to those payout ratios, and we could see that right here. 5 years ago, $2.81 billion to 1 year ago, $3.5 billion. That is an increase of 25% with an average of $4.22 billion. Now, the problem here is that they reached their peak 3 years ago at $6.1 billion, and then from 3 to 2 to 1, continuously decreasing. That's why I'm giving it a 60%. When it comes to the revenue, very nice increasing graph, $141.6 billion 5 years ago to $227 billion, increase of 60.31%. I'm going to give this a 100%. Assets minus liabilities, this one's also looking not too bad either. It's not consistently increasing. They did have a little bit of a decrease from 3 to 2 years ago, but for all intents and purposes, this is still looking fairly good with today's difference at $20.6 billion. Average total assets is $57.7 billion. Average liabilities is $39 billion. And doing this difference, we get $18.7 billion. I'm going to give this an 85%. Now, in the cash flow minus the total liabilities, this unfortunately is looking awful. Their lowest point was actually 1 year ago at negative $40 billion, and this has been consistently decreasing year over year, getting lower and lower into the red, which is very, very bad to see. Average cash flow minus average total liabilities is negative $34.76 billion, so I'm going to give this a 0%. Coming now into the shares outstanding, unfortunately, this is an increase on the 5-year, going from 438.2 million shares to today of 442.7 million shares. That is an increase of 1%, and from the previous to the current year, another increase of around 1/5%. The reason for this is, I believe, well, they probably just saw their share price is very much overvalued, so they just issued shares. I think that's the reason. 1% isn't too bad, but I'm still going to give it, guys, a 40%. And lastly, when it comes to the cash and equivalents, they currently hold $10.2 billion with an average of $9.73 billion. These weighted grades, guys, come out to be for a total grade of 70%, so right at the spot. My biggest issue is this cash flow minus liabilities as well as the shares outstanding, not to mention the fact that the free cash flow also needs to be a little bit better in my personal opinion. Not consistently increasing, and in fact, kind of consistently decreasing within the past 3 years. But now let's actually see how much this company is actually worth. Making low, medium, high assumption, revenue growths of 8%, 10%, and 12% in the next 4 years, and a predicted share buyback of -1, meaning that they'll issue shares, 0, meaning that they won't buy or issue shares, and a predicted share buyback of 1%. This puts me between the ranges of $127 to $148, not adjusting for debt. Not adjusting for debt, this actually comes up a significant amount. They really have very little debt, guys, which is very, very good to see in relationship to that of their cash and equivalents. This comes up to now $276.79 to $319.27, adding a margin of safety of 5, 10, and 15%. This puts me between the ranges of $235.27 all the way up to $303. So as it currently stands, with a current share price of $480, at the rosiest assumption, highest assumption, adjusting for debt, $319.27, this is looking like it is very expensive. But again, guys, not financial advice. Every investment is the present value of all future cash flow. Once again, just like Broadcom, have this calculator. It is available for free. As I always say, you can also have the book value one, reevaluation one, and even a dividend tracking sheet. Now, for some reason, this isn't necessarily working right now. I don't know why, but I do own Costco, as you can see right here. I do not own a lot of shares. I own one. That's about it. So it's not a lot. mainly because I find it very, very expensive, but it is still a company that I would like to own in the future if it does fall to around like these kind of prospects. Now, I personally think that 480 is still very expensive. I would personally begin buying it at around like $400 or so, because I don't necessarily mind paying a small premium, especially for Costco, but 480 to me is just way too much. So all I'm asking for in return, guys, just as I said with Broadcom, is just help me grow my channel. Like, subscribe, comment. It really does help her with the algorithm on YouTube. Thank you so much for everybody who have subscribed. I really do appreciate it. The best way that you guys can help me is just like, subscribe, comment. It really does help. Now let's actually take a look at this dividend, because, well, this dividend isn't that big, and at the price that it is at, you're not going to get a lot. Putting in $5,725, this nets you almost 12 shares for an annual dividends of $43, quarterly dividends of $10.73, and a monthly dividend of $3.58. So as it currently stands, Costco is a company that I personally would love to own more of. I mean, they just have amazing fundamentals. It could be a little bit better in some areas, but still doing pretty decent in my personal opinion. It's just the share price is way too overpriced right now. It just, in my opinion, it is. So unfortunately, even though the earnings did come out pretty bad, I mean, they didn't beat analyst estimates, but they are still growing. They didn't fall enough for me to actually fall in love with this company just yet in order for me to just buy them. But anyways, guys, that pretty much does it for this video. You guys got 2 earnings report for Broadcom and Costco. I will have the timestamps at the bottom just so that way you guys can go to whichever one that you want to see. And of course, I will also have the earnings report websites if you guys would like to see it and read them for yourselves. Again, thank you all so much for everybody who have subscribed, comments, and just interacts. I really do appreciate it. You guys can also follow me on my new tech sites, link in the description below. And I would also like to make an announcement. On the 13th, guys, I will be live streaming the CPI numbers. I may also be able to live stream the FOMC meeting, but the CPI numbers will 100% happen. So if you guys would like to join me at around like 8 a.m. Eastern Standard Time on Tuesday the 13th, and we could be here to just see the CPI numbers, because it's going to be crazy in my personal opinion. So we're probably going to see a spike up or a spike down. Should be loads of fun. And I may even extend the live stream to market open as well if it's going good. So with that said, peace out, and I will see you all in the next earnings report and stock analysis video.